What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 18th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content. I will continue to make it for you. Today we're going to talk about the price action in the indices. Some pretty crazy action during OPEX week. We are going to go under the hood. We'll check out our sectors and style factors as we always do. We'll take a look at some of my trades for the day, and we'll look at our options order flow. Before we jump into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in here. So we ended up having, a dump into the close today. And this market, continues to be incredibly choppy, continues to be incredibly volatile, and there continues to be these very large ranges. So if you look ever since early May, I guess the whole sell in May and go away thing, turned out to be right. We look at the seasonality data every weekend, and the seasonality for May really is very choppy. And that's kind of what we're experiencing right now. Just back and forth, sloppy action. You can see we tested above this monthly point of control today. And we ended up putting in a large extended range downside candle. For our box scores today, we had the S&P 500 as measured by the SPY down 0.86%. We had the NASDAQ down 0.68%. We had the IWM small caps down 0.76%, and we had the Dow Jones close down 0.74%. So yeah, tried to test this point of control here and rally above it. We ended up failing, and you can see, by the time we closed, we're now below the 20-day simple moving average, and we're below that 5-day exponential moving average. And you can see we pretty much tagged this value area low here at around 41.08.5 on the ES futures. So it kind of puts us in a precarious position where, okay, so we tried to rally through the monthly value area and we failed. We were never able to tag the top of value. We hit a snag on this point of control, and now we are rolling over. So logically, when I look at this chart, I'm open to tomorrow just being some sort of inside day, but could we just pierce right through this, monthly value area low? Yeah, that's certainly possible. And then below that, we have this 50-day simple moving average, which is right here at about 40.72. So if tomorrow ends up being, a super ugly day, that could be a potential destination for us. But I think, I added one short position on the books today. If we get a break below this, that's probably where I'd be a little bit more aggressive in shorting things. But yeah, we'll have to see what the river brings. Let's see. We're going to check out this hourly chart. And yeah, you can see for the hourly, we are now trading below this weekly point of control. So yeah, the 40.78, this level right here, coincides with the 50-day simple moving average. So yeah, I wouldn't be surprised if we explored that level, see if there are any buyers down there. I'll pull up our NQ. The NQ, yeah, this one tried to rally, had a nice 2-day streak, and it's kind of just slipping into the abyss here. So, we have this, we're already well below this monthly value area. But I think the real question is, can this turn into an actual bloodbath where we correct all the way down to this 12.623 level? Again, we're just going to have to see what tomorrow brings. But we did close, very close to the lows of the day. So it's certainly not confidence inspiring heading into tomorrow. And then Russell, this one has just been unless you're day trading it, this one has been very tough. So the Russell, Just broke below this monthly value area again. And every time this thing really looks like it's about to hit the canvas, there are dip buyers that always come in. But we'll have to see, if we do get a true breakdown here. And then what else do we have? Our Dow Jones. The Dow Jones is really just starting to show some weakness. The Dow Jones was able to rally above the monthly value area high, but you can see it just made an epic lower high. So I actually have the Dow Jones on my watch list in terms of, just shorting it. We'll have to see. This one, we'll see if it takes that round trip through this monthly value area again. But yeah, you can see this back and forth action we've been seeing. All right, so let's take a look. We'll check out our sectors and style factors, go a little bit deeper under the hood. And yeah, you can see the breadth was not great today. Almost as bad as those two or three really big capitulation candles. We only had 21% advancers in the S&P 500, 33% in the Qs, 36% in the IWM, and only 13% in the Dow. So in my opinion, I think today may have been the first day of a rotation out of some of these value stocks. Let's see if the data really bears that out though. You can see pretty much a sea of red today. Funny enough, Tesla was one of the only stocks that was green today. And some of the healthcare names as well. These, they were very green earlier in the day, and then they kind of faded a little bit. All right, so if we look at our sectors, what do we see here? So yeah, you can see the gold miners, which have been very strong. They closed down 0.13% today, so still, showing a lot of strength. In terms of the areas of the market that were green, you can see Chinese internet names are actually moving a little bit higher on our momentum list. Those have been on the bottom for quite some time. You can see this 3D printing ETF, global autos, medical devices, all the ARK funds as well. So what I'm seeing is a lot of these momentum areas of the market. Now let's look at what got hit the hardest. So home builders got hit really hard, down 2.3%. What else got hit really hard? Financials got hit. Energy got hit. I see telecom got hit. But yeah, it kind of looks like the areas that were hardest hit are those cyclical areas. Yeah, materials hit hard. And if we look at our style factors, we can see, high beta was the worst performer on the day, followed by cyclicals. Yeah, so a lot of times when we get these rotations, because what I'm hearing, through the grapevine and from some of these macro research analysts, there's one, I watched an interview of Darius Dale. He is from 42 Macro. And, super smart guy. He has a full-on macro process. And he was pretty much saying, we are approaching, peak growth and peak inflation for the time being. And he was saying essentially, by the time we hit July and maybe at the latest August, we should sort of be at the peak of inflation. And when you think about the past few months, everyone's been talking about inflation, everyone's been pricing it in, all those stocks and all those groups are going up. So part of me is wondering, is this the beginning of that rotation? So I ended up shorting the industrials, but we'll see what happens. All right, so my trades for the day, we'll take a look. I did a lot of trading today, so we'll run through this as quickly as possible. Let's see. Okay, yes, this is where I started today. So I closed out half of my Google call spread for $5.65. I had paid $4.89. Pretty much what I was looking for in Google was a test of this monthly value area high. And I was like, okay, if we get that, I will take a piece off. So I closed half. I wasn't really expecting it to close this week. But yeah, it took off half for a nice little winner there. Then my CrowdStrike, I had some July 185 strike calls. I closed those out for 21.10. I had paid 19.25. And really what I was targeting, for an initial target in CrowdStrike was this version point of control. And, we hit it very nicely. I'm trying to think, was it on like the hourly chart? It's like disappeared now. Yeah, there it is. So right here, we hit that VPOC. We actually blasted right through it, but then you can see there was some selling into the end of the day, and we kind of found support there. But yeah, CrowdStrike still looks good to me. You can see it's kind of like curling higher, but it actually found resistance at the 50-day simple moving average. So I'm actually going to set an alert on CrowdStrike. See if it catches some bids and if it remains strong. But yeah, I'm out of that position for the time being. I had a Baidu earnings trade on. I closed that for 471. I had paid 463. Curious to see how Baidu closed also. It just looked kind of weak. Yeah, and it ended up closing weak, so I'm actually glad that I took that off. But yeah, the worst feeling is when you enter an earnings trade and you're looking for, say, like a pop, and the stock just doesn't do that. And it's like you're right on the cusp of winning or losing your trade. And at that point, like if you stay in it, it's like you're not even really trading for the earnings anymore. You're literally just like, okay, over the next 3 days, is this stock going to go up 1% or down 1%? Like that's really like what you're trading for. See, I took that one off. I'm glad that I did, for a very, very tiny winner, essentially a scratch. And then I had some Roblox calls on for June. I had the 75 strike calls. I closed those out for $6.40. I had paid $5.67 for those. Now, when I said looking to roll this out in time, Roblox is still my largest equity common stock position. This is another one where I'm glad that I closed it out. And part of me is like, I'm bullish on this company. Why would I close? But I'm in such a short-term option. It was a June option. So once we started hanging out above here, and then we kind of lost that level, that's where I cut this one off. And what that does sometimes is like, when you remove the position, like I removed it for a nice winner, maybe like 15% winner or something like that. Then what that does is it gives you the opportunity, hey, maybe if Roblox, if the market gets very weak, I can add this back a little bit lower. But I do like this pattern that it's putting in where you can see we've been chopping around in an IPO base. Then we sort of chopped to the upper end of the range, a shallow pullback, and now we are kind of like working our way higher. So we're getting a little bit of like a volatility contraction here. So I definitely am curious to see if this one can break above. I'm going to set this level right here. But yeah, I'm still long the stock, but yeah, in terms of like trading options or even adding to it. And then I put on a Tesla call spread. I put on the May 600 by 610 call spread for $3.87. So risking $3.87 to make $6.13. But this one, I put this on at 11:32. The market really got a lot weaker after I put this on. So Tesla, yeah, you can see it closed up 0.18%. This, I put in a green candle, and I saw like pretty much immediately after I put on that call spread, some news article came out, and it was like, Tesla has a manufacturing nightmare. So I wanted to see, like, do we just tank from here? In that case, I probably would have stopped out. But Tesla actually remained kind of buoyant and actually closed green. So in my opinion, like, this was actually a pretty weak close. I wasn't really expecting that dump, but I think it's good that an article like that came out and this stock remained green. So curious to see like if we still get that like short squeeze into OPEX. And now with the market being a little bit weaker, maybe it's not as likely. So this trade is definitely on the bubble for me. Yeah. So I did that. I got long some XLV calls as well. This is a setup in Twitter that I actually created a video. I did some modeling and I sent that out to Pristine Capital members. This is a really interesting setup for Twitter. I got long some January of 2022 calls. And then I closed out my ARK calls. I had some lottos for May 28th. I closed those out for 665. I had paid 580. So yeah, it didn't end up being like the short squeeze I was looking for. Originally I was thinking maybe this thing could double or, triple. Yeah, the market got very weak, so I was like, I'll take a base hit and just reduce the risk from that. Then I got long some industrials puts for September for $4.75. Industrials, they definitely look pretty vulnerable here. Yeah, they closed down 1.46%. And yeah, just, very similar to all the other stuff, made a lower high. Now we're getting this pullback here. Yeah, so I added that on the short side. Yeah, and then healthcare. Looks like a nice setup here. Got long for September. Healthcare managed to close slightly green. But you can see we are trading still above this monthly value where we're above the 5-day EMA. And, with this one, if the market had remained a little bit more buoyant, this one had a nice look to it. You can see it put in high volume here. And there's a bunch of accumulation looking volume over here as well. See, XLV, I like that one. And then what did I do over here on the stock side? Yeah, so I actually stopped out of my Bitcoin investment trust for $35. I had paid $40.02. That one, what I'm noticing with Bitcoin is, I want to be in things that are trending or things that, I have a real constructive thesis for it. Bitcoin, you can see it sort of lost its trend. Could this be a bottoming point? Maybe. But earlier in the session, I was like, this thing just doesn't look very strong. I'm going to close it out. Because Ethereum just looks a whole lot better. I don't really see any reason why I should be tying my money up in Bitcoin when I could have it either in cash, in stocks, or in Ethereum. At this point, looking at the charts, that just doesn't make any sense to me. So yeah, I closed that one out. And then I closed out my home builders at 9:42. So this was very early in the morning. I just noticed this rotation to the growth stocks. And I was like, all right, I'm getting out of this. So I closed for $75. I'd paid $75.22. Closed out for a very small loser, essentially a scratch. And if you look at the home builders, what they did, I closed out at 75 up here. These things really puked. So I think this is another area of the market that's very vulnerable. And at this point, it actually looks like a short. Because this is something else. I think this is pretty important to go over. So this lumber to gold ratio. We have the lumber to gold ratio that's down in this bottom pane over here. And then this up top is the S&P 500. Let me actually pull this down again. But you can see when this lumber to gold ratio, this is actually something, there was a white paper written on it by this guy on Twitter. His name is slipping my mind right now, but he has a ton of followers. I'll find him. I want to make sure I give him his credit. Yeah, his name is slipping my mind right now, but anyway, yeah, he's written heavily about this. And yeah, you can kind of see, I don't think it's like a holy grail or anything, but I was like, let me put this together on TradingView. And you can see this lumber to gold ratio dropping does tend to coincide with some market corrections. I mean, in this case right here, lumber to gold corrected. And then you can see we ended up getting sort of like a corrective sequence maybe a couple weeks later. Here you can see lumber to gold is essentially crashing. Are we going to get a more meaningful decline in the market that looks something like this? Could be. And essentially the theory behind it is, lumber prices directly feed into housing, which directly feeds into economic activity. And so that lumber to gold ratio ends up being like a good bellwether for economic activity and, the market. So pretty interesting. It's not like it's an end all be all, But just wanted to plot this. Yeah, you can see this time. It looks like more of like a coincident indicator. You can see, yeah, lumber to gold really took a spill back here in 2019. And lo and behold, a couple weeks later, we had a pretty sizable correction. So yeah, very interesting actually. So yeah, if this thing starts to enter into a more sustained downturn, this is pretty big. Could this really just be the beginning of a correction? Now I'm getting a little paranoid over here. No, I'll have to see. I mean, I'm going to take it day by day, especially for, my trading account. I flipped a little bit more bearish where I took off some longs, and I added a short position. I'm not like net short or anything, but I might have to, flip that way in the days to come. We'll have to see. And then what else did we have here? SE, my common shares, I closed out for 212. I'd paid 211.78. They had an earnings report and they missed. They ended up rallying after this. What it is. Sometimes that just happens. I took some Roku long and some Shopify. Then I closed out this OLN. This is a materials name. Closed it out for a small loser here. Closed out for 45.55. I'd paid 46.83. And I just said if we get a rotation out of value / inflation into growth for OPEX, I don't want to be in this name. And let's see what that one did. Yeah, and that one also got crushed today, down 3.15%. So yeah, I'm glad that I made some of those adjustments. The other big thing for me today was Blade earnings. So Blade earnings was yesterday. They reported a nice quarter. The CEO pretty much explicitly said, hey, we know this stock is undervalued here. I found out yesterday, I thought they had $3.75 worth of cash. They actually have $4.25 worth of cash. And the stock is trading for $8.34. And as of 3 days ago, or 4 days ago, this thing was trading for as low as $6.41. So imagine that they have $4.25 of cash and it was only going for $6.41. That's around where I bought my calls. I have the 7.5 strike calls, so those performed really well for me today. And we'll have to see. I'm holding on to them. We'll see if this catches any more momentum. We did not close on the highs. We were as high as 909. As of right now, these calls, I bought them for 69 cents. They're marking for... What are they marking for? Yeah, they're marking for about like 155. So as of right now, it's a little over a 100% return. Even earlier, they were marking for like 190 at one point. So yeah, I want to see, does this get some legs? Can Blade actually make it back to $10 a share? I think it's definitely in the realm of possibility, which is why I'm giving it a little bit more leash. Maybe there's some more players that, find out about this name and they make investments into it. And this could go from a 100% return to maybe even a little bit better than that. We'll have to see. And then real quick, we'll pull up our options order flow. And what do we have here? A ton of puts. In the morning, there were some calls going up. We had Amazon. We had some Tesla, Viacom. Let's see Viacom. Oh my gosh, this thing looks... it's just dead money. It's one of the Huang stocks. Who knows? Maybe it just lifts off at some point. But it doesn't really look like a setup for me. And then you can just see a lot of SPX puts coming down. We had some Boeing, some SPX calls. XLV, I noticed this come down about $1.4 million worth of calls with the 135 strike. I noticed some KWeb coming down. Or at least just one order, more XLV. So that was really like seeing these XLV orders and then looking at that chart setup as well. That's what prompted me to put on my position at XLV, where I was like, this makes a lot of sense. And then into the close, more puts. So I'll be looking to see what the put to call ratio looks like for tonight. It has been very elevated for the past couple of weeks now at this point. And let's see the fear and greed index. a 38 again. So the market is fearful. But part of me is wondering now, like, we have all these put buyers. We have everyone lightening up on positions from what it seems. But the market's just not really resolving to the upside. So are we going to get an actual market correction? Let's zoom out to the weekly chart. And that lumber to gold ratio with lumber falling over, what do you think that's going to do to the industrials, the home builders we already saw, the financials? That's why I took my short in industrials. If I do add more shorts, I'm probably going to be adding it in those areas like the Dow, like those specific areas of the market. And yeah, you can see S&P 500 had an incredible recovery last week, but now in the grand scheme, we are just trading in the wick of last week. Let's see some other times when this happened. So this kind of reminds me of a similar situation back in August. So we had a corrective sequence that looked, super volatile. Look how big this candle is. We put in a long lower wick though. Very similar, this is an even longer wick, but kind of similar. Then the following week, we traded within that wick. Oh my gosh, and I remember this. This was before the election. I remember trading through this and being like, oh my God, if I had just added a few more shorts, like either in here or in here, this was like a 4-week correction. So could we end up getting another one of these 4-week events where we just kind of slide, and before we know it, we slide into this 20-week moving average? Food for thought. I think the weight of evidence is kind of pointing in that direction at this point. So still a lot more work to do, a lot more research to do. We'll see how the futures trade tonight, and see how things look into OPEX. But definitely not afraid to make changes to the game plan here. And, if the setup favors not being that long anymore, I have no issues, adding on some shorts. But with that being said, that about does it for this recap video. Hope you all had an awesome trading day, and I will see you all tomorrow.